Harris or Trump, the game changer for your investments? If you follow the news, there seems to be nothing more interesting than the upcoming US elections on November 5th. And in many respects, they will be very important. But how important are they for your investment portfolio, for equity market, for instance? Let's have a closer look. Apart from all potential short-term fluctuations, the longer picture actually shows that you could be rather relaxed no matter who is the upcoming president. And look at the chart for evidence. What you see here is the performance of the broad US equity market for a very long time period, starting 1933. And you have two colors, one for the periods with a Republican president and one for the periods with a Democratic president. So two different colors, two different parties at power. And you see equity markets in the long term, as we all know, have been rising relentlessly no matter who, in almost all periods. Why? Because at least over this time period, the economy, also the US economy, has been growing. So on the end of the presidential term, the US economy was larger than before. Therefore, companies made more earnings and were valued more highly at the equity market, at least in most periods historically. What could be said about the short-term pattern around US elections? Well, in the next slide, you see two lines. The lower line is the typical development of the US equity market in an election year, over this year. So you see it's going up on average in an average year. And the upper line is the same for non-US election years. And you see there's not too much difference. And if there is something to be said about the election period, equity markets tend to be weaker in autumn in general, therefore also before the elections. And once the elections are finished, no matter who won, the political risk is perceived to be lower. Equity markets start to rally into a year-end rally. That's the historical pattern. No guarantee that this is like this year in any year, but that's the only thing actually you can say for short-term effects of US election years. If you now say, but I know who will become president, and it will be a big surprise. So what if you have inside information and you wouldn't know who would become president? What sectors, what markets would it be worth betting on? And here I would be very cautious. First of all, the race is very close. But second, let's take the example of the last US elections. Even if you had known in 2020 who won the elections, Biden won very narrowly actually, which sectors would you have been betting on? I guess new energy companies like solar, wind, etc. You would have betted against the weapons industry, defense industry, would have gone short maybe US oil and gas because Democrats have said to favor these sectors less. Good luck. What happened actually with the performance? After the close Biden win in the years afterwards, what outperformed was actually oil and gas, massively in a rising US equity market. What massively underperformed was the new energy part of the equity market, and defense industry companies also outperformed. Not because of a particular agenda of the president, but simply because fundamental factors were driving these sectors. For instance, oil prices rising after the corona recession, Ukraine war breaking out, green energy companies being very expensive entering the Biden presidential term, etc. What do we take from this? Don't get too much distracted by US elections. We would caution against now coming up with a short-term US election portfolio. Stick with the things that work, long-term fundamentals, broadly diversified portfolio, and a reasonable portion of calmness. If you liked what you just heard, don't forget to subscribe us, like us, ring the bell, and looking forward to see you after the US elections. Have fun and good luck.